are numerous famous quotes about real estate investing. Steve Bolton said, "The only bad time to buy property is later." Mark Twain said, "Buy land, they aren't making any more of it." And finally Andrew Carnegie, the famous steel magnate, said, 90% of all millionaires became so through owning real estate. As we can see, there is something about real estate that makes it worth investing in. In today's video, we explore the top 10 reasons to invest in real estate. Before we begin, please like this video and hit the subscribe button with notifications turned on so you will be first to know about new content. Our mission at the Personal Finance and Investing channel is to empower people to achieve financial independence. Subscribing will help us achieve that goal. Now, let's get back to today's video. Before we get into the top 10 reasons to invest in real estate, let's briefly cover the different ways to invest in real estate. There are several options. Real Estate Investment Trust, or REIT. A REIT is a company that owns real estate such as retail properties, apartment buildings, hotels, offices, or warehouses. When an investor buys into a REIT, she purchases a share of those properties. It is analogous to a mutual fund for real estate. The benefits of a REIT include being an easy way to get started and getting exposure to real estate as an asset class without the hassle of maintaining or managing the physical properties. REITs make money for investors in two ways. First, they make regular dividend payments to investors. Second, if the value of the REI increases due to the appreciation in the underlying real estate assets, you can sell your investment for a profit. REITs are listed on the major stock exchanges and can be invested in just like you would a stock or mutual fund. Residential properties. Buying investment properties outright can be lucrative, though they take more effort than just buying shares of a fund. Investors typically finance the deal with a mortgage loan, which increases the risk of the investment. Investors can make money on residential properties by either renting out the land or facilities or selling the asset after it has appreciated in value. Renting properties out typically takes one of two forms: long-term rentals, where someone moves into the property for an extended period such as 6 months or more. Alternatively, some properties can be used for short-term rentals, where someone rents the asset for use for a handful of days at a time. The daily room rate for a short-term rental is substantially higher than it is for a long-term rental, but the vacancy rate is much higher as people typically do not book every single night for the rental. The short-term rental market is dominated by two main players that serve as marketplaces for homeowners who want to rent their homes and renters who want a place to stay while on travel or vacation. These are Airbnb.com and VRBO.com, vacation rentals by owner. If purchasing a property as an investment, there are several factors to consider. As the old adage goes, real estate is all about location, location, location. This refers to the fact that the most important consideration is the location of the property. The second and third most important factors in the value of the asset are also location. For example, does the property have a great view? Is it in a good neighborhood that is aligned with good public schools? Is it in a neighborhood with a well-organized POA or WA that helps keep property values high, or is it in a neighborhood with low maintenance standards and property values drop? Does it have amenities nearby such as parks and a swimming pool, or restaurants and stores for shopping? Another consideration is how much work needs to be done on the property before it needs to be rented out. At the very least, a deep cleaning should be required, but sometimes more in-depth maintenance or repairs are warranted, such as replacing the carpets, fixing holes in the drywall, applying a new coat of paint, replacing old or worn appliances, doing landscaping, etc. Getting a great deal on the purchase price is a start, but if maintenance and repairs will be extensive, that will eat into profits. Might consider holding some additional funds in accrual to have a maintenance fund on hand. Another consideration is the basic financials and profits of the deal long term. For example, what do you expect the occupancy and rental rates to be? If the property is located in an area with a shortage of housing, occupancy and rental rates will typically be higher. If there are solid employment opportunities nearby, occupancy will be higher. If the property is to be used for a vacation rental, ensure that there are attractions or touristy destinations that will drive users to the area to stay frequently. If it will take a few months to get renters into the property, you will have to pay the mortgage out of pocket without having the backing of a renter paying you to subsidize your payment. Will you manage the property yourself or outsource it to a property manager? Typically, a property manager will cost approximately 10% of the rental amount, so you will need to balance the convenience of having someone take care of the property for you with the cost that you'll pay for that. If you anticipate there will be future repairs and maintenance to appliances or the property itself, you should accrue some funds each month for those expenses. The interest rate on the mortgage to purchase the property also has a significant impact on the profitability of the investment. After the financial crisis of 2008, mortgage rates dropped significantly. The average 30-year fixed mortgage rate in the U.S. was below 5% starting in 2010. It remained low for more than a decade, dropping into the 2.5% range in 2020 and 2021. More recently, as the Fed has increased interest rates in order to combat inflation, this has significantly raised the mortgage rates, which now at the time of this video average over 6%. This will lead to a significant difference in the monthly payment. Let's take an example to look at. In the first quarter of 2022, the median home sale price in the U.S. was $428,700. At 2.5% interest rate with the standard 20% down payment, the monthly principal and interest payment would be $1,355. At 6%, this monthly payment would be $2,056. This $700 difference equates to a 51% increase in just a short period of time. Rental rates have not increased at the same level, so the fundamental economics of real estate investing has recently shifted significantly. Commercial properties. Another real estate investment option is to buy or invest in commercial properties. Examples include office buildings, retail establishments, or apartments. The value of these investments is similar in nature to a residential property in that you will either make money by having tenants pay rent, or you can sell it for a higher price in the future than you purchased it for. The business model for buying commercial real estate is also very similar to residential real estate, with the exceptions that the prices involved are typically much higher and the deals and ongoing management are more complicated. Most novice investors tend to avoid these deals for these exact reasons. Deals are typically done by more seasoned investors who have experience, capital, and resources to manage the properties. Now that we've provided some background on how real estate investing works, let's talk about the reasons to invest in this asset class. There are several key reasons. 1. Steady cash flow. This is one of the primary reasons why investors love this business model. Stocks tend to provide very infrequent cash flow, for example an annual dividend payment, whereas real estate often provides monthly income from tenants, or even more frequent in the case of vacation rentals. This allows real estate investors to think of real estate much like the income from a job. If I can generate enough monthly cash flow from real estate investments, could I quit my 9-to-5 job? 3. Great returns. Historically, real estate investing has led to fantastic returns. Over the long term, prices have gone up, which has allowed for investors to make handsome returns on investments. 3. Long-term security. Real estate is typically a long-term investment, given that there are monthly cash flows and investors intend to buy and hold for a long time to get slow and steady price appreciation. 4. Tax advantages. Investors can deduct many expenses associated with owning an investment property from their taxes. Examples include property taxes, mortgage interest, property management fees, insurance, and maintenance. Additionally, the profit from selling the asset at a higher price than one paid for it would not be considered income but capital gains. The tax rates for capital gains are much lower than income tax rates. This provides a significant tax advantage for investors. 5. Diversification. One of the key principles of investing is to diversify investments. This means that if one sector takes a hit, it does not disproportionately affect the investor's entire portfolio. Real estate offers diversification to giving exposure to a different sector for investing. While other sectors like the stock market might decline, real estate might continue to grow and deliver attractive returns. 6. Passive income. For a job, people have to work long hours to earn their pay. Real estate delivers cash flow with a substantially lower ongoing effort. Investors do not have to spend huge amounts of time managing the properties. Rent checks come every month and provide income without substantial effort. 7. Ability to leverage funds. With stock investing, investors have to pay cash for the full amount of their investment. For example, to buy $1,000 of stock, an investor will have to pay $1,000 of cash to pay for that investment. With real estate, investors typically finance purchases which allow them to buy assets that are higher priced than they can afford to pay with cash. Using a loan in this way is referred to as leverage. Investors can add to their real estate holdings without spending the full amount of money to buy the asset outright. 8. Protection against inflation. At the time of publication of this video, inflation is raging. The cost of everything from gasoline for our cars to energy to heat our homes, to putting food on the table has gone up significantly. In fact, this is one of the key stories of 2022. Real estate is typically considered to be a good hedge against inflation. Historically, landlords have been able to increase rents and outpace the rate of inflation. As inflation goes up as it has recently, rents typically increase substantially too. While the stock market has suffered in this environment with rising costs and interest rates, existing real estate investors often have fixed costs of their mortgages and increasing rents, which makes their investments even more profitable. 9. Control. Owning a real estate investment gives the investor control. When you work for a job, you are beholden to your manager and can make decisions within a limited range of options. As a real estate investor, you have more control over how you make financial decisions. Should you sell the asset and take profits? Should you raise rents to maximize cash flow? Or lower rents to increase occupancy? Should you invest more in a remodel which will increase rents? Or just rent it out as is to minimize cost and time? With real estate investing, you are your own boss and can make the decisions that you want to make. 10. Tangible asset. Real estate is a tangible asset in that you own a specific plot of land and the buildings on it. With stock investing, it is a bit more amorphous in the sense that you are buying an interest in an entity. At the end of the day, what do you really own? What if the company you invested in makes services that you can't even touch? What if the company you bought stock in is not profitable? What do you own then? The tangible nature of real estate provides a lot of comfort and stability to investors, especially in difficult economic times. Let us know what you think in the comment section below. Also, let us know if you have specific topics or questions you want us to address in future videos. Don't forget to like this video and subscribe to our channel so we can help achieve our mission of empowering people to achieve financial independence. Thank you for watching, and we'll see you next time.